Well, for more reaction to IBM's third quarter earnings, going to bring in now Jim Kelleher, Director of Research at Argus Research. Jim, it is good to see you. So listen, IBM reports were down about 4.5%. Jim, sales disappoint. It looks like consulting business flat, but walk me through what you made of the report. What's your take here, Jim?
Right. Good afternoon. So what I would say about the report is, yeah, the revenue was a little light, and that's the instant reaction. It is worth keeping in mind that this long time lagging stock was up about 42% year to date. Its peer group is up, considerably less. And finally, investors seem to believe that that IBM is getting the AI right. And at their Think event, they had a lot of good things to say about that. But I guess right now, investors are just going through the numbers. You had good growth in the software side. It's worth noting that consulting has been negative for them, as it's been for Accenture and Cognizant and everyone else in that space for a while. So just to get to flattish, not bad. I think the downside surprise was probably on the equipment side, the infrastructure business. So that's where I would say you got the softness in revenue. But you also, as a result of there being less hardware, more software, a little better consulting performance, you got a nice uptick in gross margin year over year. So it was a better mix overall. And I think when people, go through the numbers, it won't seem so dire.
You mentioned AI, so let's drill into that, Jim. It looks like bookings for AI consulting and software have exceeded $3 billion since mid-2023, the company now saying. I'm just curious, when you talk to clients, Jim, do you argue, listen, IBM is a smart way to play that mega AI trend?
Well, I think they're really getting the AI story together. For a long time, the company spoke of hybrid cloud. And when, like a year ago, when they were talking about AI, like every other company, it seemed like a little bit like vaporware. But specifically at the Think event, they talked about their granite models that are really, and Arvind, the CEO's strategy is that enterprises are going to begin with a large general purpose AI model, but when they want to hone down to their own business, they're going to need specified models that are going to work for their enterprise. And that's where the granite modeling comes in. And these LLMs look like they're impressive and tailorable and plug and play to some extent. So, generally, I think their cloud strategy and their AI strategy is now kind of working in concert.
You're right, Jim, to bring up. The stock might be down here in the after hours, but what a run for IBM this year. I mean, heading into this print, it was up about 40%. Given that run, though, Jim, how would you think about valuation for this name at these levels?
Because the stock has been kind of a chronic underperformer over the years, you could say the stock is trading at something like 22 times on its annual estimate, maybe 21 on next year, maybe even a little less. That is above the 5-year PE, but again, it's been a very depressed stock. But that's a market PE for a stock that has a potential for growth here. And the earnings did grow a little bit, again, a little disappointment on the top line, but I think that's addressable. And we'll see how that goes going forward.
Jim, great to have you on the show. Appreciate that instant analysis. Thank you.
Thank you.